John Jenkinson with you here as we check out what's going on in the markets. We'll start in the corn market here first. Corn, well, last night on the overnight trade was kind of mixed to a little bit higher, but we are sharply lower right now. May down 8 1/4, 346 3/4. The new crop December down a nickel at 362, only leaves us a half a penny off of the bottom. Over in the soybean market, though, well, things are a little different. May at 4 3/4 at 826 1/2. New crop November up a quarter at 845. That's despite the fact that the VIX index is still hanging in there around 70. Chicago wheat for July at 4 3/4 at 504 1/4. And the Kansas City wheat for July up 8 3/4 at 439 3/4. Minneapolis wheat also on the higher side as well. Let's go and check in with Todd Horwitz today with Bubba Trading. Todd, I want to get down into this. There are so many moving parts. There's so much volatility in all of this market. Can you straighten it all out for us here?
Well, I mean, I think today what you're seeing, John, in the equity market is you're seeing, we call it an old-fashioned rip-your-face-off rally. I mean, you knew after a 3,000-point sell-off you're going to see some kind of a bounce, and this is probably just that bounce. Remember, in all markets, when rallies look so good, they're usually just dead cat bounces, which I believe this is probably going to be when it's all said and done. I think there is a little bit of a problem with corn here. I mean, it should be finding a bottom somewhere here. I think we've seen the lows in wheat and in soybeans, but corn seems to want to just continue to go lower. I think there's probably some forced liquidation going on there right now. Obviously, the biggest crop, a lot of issues, a lot of loans. So I think, but overall, I think that the grain should start to settle out and we'll start to see some upward movement. I think the equities are seeing just simply a dead cat bounce, and the VIX, although much higher than it should be, is down fairly good today, but still obviously way up in the stratosphere, which is still indicating there's a lot of fear on the street.
Boy, you made a good point there. It is in the stratosphere. I do want to ask this, obviously this coronavirus is not run its course in the markets whatsoever. As a producer in these kinds of times, what is the best strategy?
Well, the best strategy, John, is always to be hedged against risk. And that's what you can do fairly easily in these markets. And if you're hedged, then this kind of action doesn't bother you. In fact, it actually can benefit you and change your basis back and forth based on what's going on in the markets today. And I think that's one of the errors that so many make out there, is they're not protected for the catastrophe. Now, again, this may turn out to be fine, but why should we have to sit and hold and hope that it goes back versus just being protected and collecting when these things happen? So, you know, we're protecting against our capital, which at the end of the day, it comes down to money. And that's what we're trying to protect. So I think that's one of the biggest things. I think you do that, you're always protected for adverse movement in the market, and it keeps you in the game without having to be stressed out over the market movement.
Todd, I only got about 20 seconds here, but I do want to ask you about the dollar. Are we on our way to par here?
It certainly looks like it. It looked like they were trying to take it down. And the big thing about here is when the Fed cut rates, that should have taken the dollar much lower. It did not, which tells you that there's still much more fear and people are buying dollars because that is one of the safe haven asset classes that people go to.
All right, Todd, thank you very much. Have a good afternoon. Todd Horwitz with Bubba Trading here with us from his office in Redwood, Illinois. We've got more just around the corner. Stay right here with us on the Marketing Report.